Hello everybody, welcome and happy Friday afternoon. Welcome to Power Trading Radio. I'm all over the place today. I was rushing home. I'm in my Giants jersey hoping it's my first place team, your best team in baseball. Welcome to the TraderMerlin show, not Power Trading Radio. Maybe at some point we'll bring that one back. But hello everybody, Chris. Good to have you with. Hope you're working hard on a Friday afternoon. Jimmy T, Big Ab, Ken, Koja, Boss Poopa, and Les Gold. Good to have you guys with us. And Shadow, yeah, it was a little bit better week for me. Not any big gains, but slight gains are good. And the good news is, as I was telling you, we're in XLE, SLV, and IWM put options, and watching this market fall apart as it did over the last couple days has been great. And of course, today options expiration, those options all expired worthless, so got another 1% just from those options. So it was a nice one, and we'll probably, given the way these markets are selling off, maybe even start doing it again on Monday morning with regards to the option selling for the next month, or maybe even just for the week. So it'll be fun. Anyway, it's gonna be an open Q&A show today. Cheers to everybody out there. I'm drinking. What am I drinking today? Blinking Owl Distillery. I try to support the local distillers. If you ever get a chance, look at the Distillers Guild. There's a Distillers Guild that basically has all of the small mom and pop distillers, and support those guys as opposed to just the big ones. So today is a place called Blinking Owl. It's in Santa Ana here in Southern California, which I found out through the Distillers Guild from Dry Diggins up in El Dorado Hills, which is an amazing distillery as well. So cheers, everybody. Happy Friday. Hope you had a great week. Let me take a nice sip of this frosty beverage and get back on keel, and we'll do a great show today. Oh, that's what the doctor ordered. All right. Again, if you have questions, feel free to send those on in. Today's show is going to be driven almost exclusively by questions. Unfortunately, there were only a few questions. There wasn't a lot of questions that came through, but I do have a lot to go over with regards to CPI information, etc. So I'm going to start there, and I'm going to start with I'll start with this one. I'm actually going to do a quote from Janet Yellen. Yes, you probably see this little stair-step move to the upside here, and I notice they all got angry faces. I think this might be where we're headed. If we look at the quote from, that's not from Chris. This is from Janet Yellen. Chris is in the shop, but I didn't get a chance to change the name. Janet Yellen said today on CNBC, "We will have several more months of rapid inflation." Not minor or small, but rapid inflation. Direct quote from the former chairman of the Federal Reserve, now the Treasury Secretary. To me, that's a pretty important one. When you have somebody that has that experience and that high up saying we're going to see several months of rapid inflation, normally they downplay things, right? If she was smart, she should have downplayed it a little bit. Like, we'll see several more months of inflation. To say rapid inflation makes me feel like they're quaking in their boots a little bit and freaked out. She also said that she trusts Powell and that they'll keep it under control. But when you look at the CPI numbers and the other inflationary data, it's pretty creepy how quickly that thing has spiked up. And if it does get out of control, especially for several more months, like if we have high inflation, again, July, August, September, October, going into the holiday season, it could really create some ruffled markets going forward. So let me show you what happened. I agree. And Big Eb says she's trying to cover her butt. She's not really, right? This is no longer her problem. If inflation is there, the Treasury's like, hey, we don't care. We're not part of this. It's the Fed who's supposed to be in charge of that. So she's literally looking at Powell going, it's your problem now, buddy. Enjoy that one. So I don't think she's too worried about it from her end. No butt to cover there. So this might be hard for some of you to read, but I wanted to bring this one up because we've been talking about inflation and those inflationary pressures. There's two in particular here, and unfortunately, I don't have all my drawing tools set up. I apologize. I thought I'd be all ready today, but we're doing so many different things. Let me see if I can draw on this one with this pen here. Ooh, I can. Oh, no, that's not where I wanted to go. Well, I guess we're going to we'll forego my drawing prowess. I thought it'd be fun to kind of draw on this bad boy for you guys. Maybe I can. Yeah, there we go. All right. So if you notice, this is the June numbers, right? We are obviously in July, so we haven't gotten July's yet, but that's the June numbers there. And what's noteworthy, you see the core CPI, it says 0.88. That's not that bad, right? Considering. But if you look down here, look at these numbers. So motor vehicles and parts, this is like the big shocker inflation numbers. And it's really not even new vehicles. New vehicles were 1.97% increase for the month of June. That's coming on the heels of 1.63%. But look just below that. I mean, used cars, this is incredible. I've never seen prices spike this quick for used cars. And I think this has a lot to do with the chips, has a lot to do with supply chain disruptions. But you had a 10.5% increase in June alone in the price of used cars and trucks, and that's coming on the heels of a May increase of 7.29%, and in April you had an increase of 10%. So these are significant gains. Unfortunately, I'm in the market for a car right now, so it's not the best time to be buying a vehicle, but sometimes you got to do what you got to do. Now, on the other side of things, you would think that airlines, which is actually part of the conversation today, I have an airline question, you would think they'd be doing rather well. Well, you look here at airline fees, they've actually started to drop. In April, we were at 10% increase. We dropped to about 7% for the month of May. And then here in June, you can see we're at 2.73. Still increasing, and that's to be expected, right, when you got summer coming and everybody's talking about traveling. The biggest increase this month, aside from used cars, is right here in lodging away from home. This is basically Airbnbs, people saying, get me out of here, I want to go travel somewhere. You had almost a 7% increase in that in those numbers alone, which certainly is fairly inflationary. Now, for me, when you look at this, I'm always trying to find the good and the bad, right? Because you look at some of these numbers, the increases are substantial. I mean, those are some pretty monstrous gains in 1 month, right? Seeing car prices increase 10% over a year, okay, fine, palatable. But 10% for a month, that is pretty damn significant. Now, I always try to look at the plus side and the negative. So is there anything that's selling off and looking weak? Well, not much. You only have 3 things on this entire table that were down. And that's right here, medical care commodities, which I'm not 100% exactly what a commodity for medical care would be, but that's medical care commodities was down 0.4%. Recreation commodities down 0.33%. And then the big loser, household operations. Maybe someone can help me with understanding exactly what household operations is. Someone getting paid for sweeping and cleaning in the house? Is this doing dishes? Well, what is exactly household operations? Anyway, that's not a very big weighting, right? If you look at the weighting over here on the left-hand side of your screen, which I will continue with my wonderful red pen drawings. There we go. Medical commodities are yeah, I don't know, Tom. I'm actually kind of curious what the medical commodities section would be. Don't know 100%, that's for sure. But, you look down here, household operations, it's not anything really important. It's 0.9%, so less than 1%. But you look at vehicles, that's 7.5% of the CPI index, which was off the charts. Right? It was a really high number. So was PPI number that came out. Now, the only real shining, really positive piece that happened was the retail sales numbers. If you guys saw the retail sales numbers today, they look pretty darn good. I did not expect it to be as high as they were. The expectations were that we were going to come out with a retail sales number of negative 0.4%, a contraction, if you will. The previous month was negative 1.3, and my thought is, look, if we come out at anything lower than negative 1.3, it's really going to be bad. But we actually came out at, so the expectation was negative 0.4. We came out at 0.6. So we're actually showing an increase in consumption, which is what should be happening right now, which is good. That's in line. It's the CPI and PPI numbers that really have me kind of scratching my head and a little bit, I guess, flustered with regards to market direction. So there we go. Merlin, when do you think we will see gold, silver perk up due to inflation? Great question, Big Eb. I am still long GLD. We'll look at that chart here in a little bit, but I'm hoping it comes sometime soon, right? I mean, I'm long this right now. I feel like inflation should start to be a bigger problem, and sometimes I'll hold my opinion too long, like I did with the S&P last year on that big put position I had. Fortunately for me, my long position on gold isn't as massive as my S&P position last year, but still I do have my bets on gold rallying and being that inflation trade, that fear factor. Just because of what Janet Yellen said today, I actually expected gold to go up a lot more than it did. I was kind of disappointed with gold's move today. It was actually down on the day, which is kind of a shocker, but we'll get to that as we progress. So yeah, I wanted to show you guys this. I thought this was a very interesting table, kind of breaking it all down. Now let's take a look at what we did for the week, right? It's obviously 1 point data just to have 1 week, but when I advance this, we'll start things off with the positive side. Oops, I got them all messed up because I had my animations in order. But I put on the left-hand side the positive markets. So you can see utilities and staples were the only positive ones. Utility was up 2.21%. Staples is 1.5%. The S&P overall for the week, running from Monday morning, was down negative 1.21%. And pretty much every other sector was down. The big loser on the week was energy, down 4.82%, and that was a pretty significant slide. We'll look at energy here. Obviously, that has something to do with OPEC and et cetera, but that was a major piece for us going forward with regards to the negativity. Energy maybe rolling over. We'll look at that ETF in just a sec. All right, what else do I have? Next one is actually a viewer question. So let me just run through some of these charts, and I want to look at, let's see. I want to look at energy because that was a good place for me this week. Now, overall, if you look at, no, that's financials. XLE would be energy. Overall, you look at energy, it had actually dropped down into an area where I thought we might bounce. I thought we kind of bounced right around this 50 mark. Well, we knifed through that thing like butter today. 48.72 is where we closed. 3 pretty ugly down days for energy, and it just kind of begs the question, where is that stopping point? Where is energy going to go? At this point, I'm kind of torn here because my gut feeling is summertime, we like to travel, and looking at the way that we've been confined in our homes, I think a lot of people are openly embracing, I'm traveling, I'm going somewhere, whether I'm getting in my car and going to the mountains or I'm getting on a plane if I can to go to some other country. I got to get out of my house because I'm going crazy. So my gut tells me there's going to be a lot more traveling going on. Therefore, I would actually expect energy prices to rise for that reason. Why? Consumption, demand exceeding supply. Now, we did have news today that, It was United Arab Emirates, UAE, and Saudi Arabia, who are OPEC members, agreeing to supply increases with oil. There went from, I think the number I saw was 3.1 million barrels, is 3.17 million barrels a day is what they extract or produce, and they're talking about jumping it to, my memory is messed up today, 3.65. So they're basically going to increase production by about 500,000 barrels a day, which obviously is pretty good for the price of oil dropping, which we saw that as well. So that's the only negative shot I see is if they do continue to increase supply production for OPEC countries, which it has to go to a vote before everybody in OPEC Plus agrees to it. That certainly would be a downside piece for energy, and I think you're experiencing that over the last couple of days. We talked about this on the Monday Morning Must-Knows. It's like keep an eye on OPEC, right? Because they control a pretty powerful piece of our economy, which is the price of oil. And if oil production increases, XLE could drift down lower. Now, I will probably be selling some puts on XLE Monday morning. We'll see what kind of premium I can get. I definitely see it stopping, or at least having a momentary pause around 47, which is a little bit away from current levels. It could go much lower than that, but right now I'm expecting it to drop back down to that 47 mark. After that, we'll see what kind of premium I can get. I'd love to be selling some options down at, let's say, the 40 mark on XLE next week. If I can get 1% for the week or 1% for the month, I will be doing that, and I'll let you know how that one goes. Hey, Don Fron, good to have you with us, Don. Good to see you. Been a while, man. Hope you're doing well. And Tesla's been so damn boring. What the heck are you trading nowadays, Don? Let's see. July to August is work 4 months for the year. According to Stock Traders Almanac, bad for longs, good for trading, in my opinion. I agree. The whole sell in May and go away mantra, I love it because it sets people's minds up for these patterns. But I don't believe that, sell in May and go away. Yeah, maybe from a long-term perspective, I'll go to cash or some low-income interest-generating assets. But there's always trading opportunities out there. Always. It will never die. All right, so XLE is certainly the big one, which I was looking at today and trading this week. Some great downside moves. I do think you'll see it continue. We did have some interesting moves in the commodities space. So if I look at silver today, silver's moved today down 2.42%. It's not that it's that concerning, but look where we are at on silver. I'll drag this line down here a little bit. We basically are at these lows that we established a couple weeks ago on SLV. After that, you see some unfilled gaps here. I am long on silver as well. Long term, this isn't a short term trade, but long term I'm on it. And I think that you definitely have the risk of this thing breaking down below 23.77. And maybe it does challenge that 22.50 where I sold my last month's call option or put options on SLV. And GLD as well. So we talked about gold. I am definitely still bullish on gold. I think if it drops a little bit more, I'd be happy actually potentially buying some more. I think you're going to see this continue to rally up and fill that gap that goes all the way up to about 175, actually 176 on GLD. All right. Now, there's the FANG. Cool. All right, what other questions do I have for you guys today? One came in, Scott asked about, let's see, where am I? Oh, can I analyze the MJ chart? All right. I'll analyze the MJ chart for Randy, and then I saw one on here from Scott, which is with airlines loaded up for summer, would you buy airline stocks? I'm looking at Southwest Airlines. All right, so let me go and look at a couple of those things. First, well, let's go to the MJ chart. Again, I feel like a broken record, but I say this all the time. Long term, I am bullish on the MJ sector, but we had a small little head fake that happened in the beginning of June when we started to make higher highs. Now, the trend is down. It's making lower lows. It's making lower highs. You know, I hate to say it, but if you're an MJ, short it or just go to cash and wait for this thing to drop to some levels that are more palatable. You notice there's an unfilled gap on MJ, which is the ETF for cannabis stocks, goes all the way back to January 5th of 2021, so not that far back, but it's an unfilled gap. Right, that gap started at $14.91. It jumped up the next day to an opening price of $16.35. I got a gut feeling you're going to see it fill that gap, or at least try to fill that gap, because it's one of the more significant ones we have on it. So, you know, if you're long on MJ, it might be a time to either maybe protect yourself with some options, hedging, or go to cash and wait for this thing to drop a little bit lower. But right now, I don't see anything on the horizon that says, hey, it's going up. To me, it looks like it's getting weaker and weaker, Randy. So, and we talked about this last week with Tilray, TLRY. You know, here's Tilray. Again, someone asked last week about Tilray, and I said that, you know, it's looking pretty weak. It's stronger than MJ, but it's still weak. And we could look at ACB and look at some of the other major ones. Here's ACB. It's stronger than MJ as an ETF, but definitely very weak over the last month. Cronus, I'll go check out some of the other ones. They all have pretty much the same pattern, but the tail end of this week has been pretty darn ugly on those specific companies and the overall cannabis sector. Don, long the dollar, the Dixie. Look at it right now, as you should be, right? You know, it's. I'm not liking the price action right now, but certainly as it's been making these higher highs, it's proven it's not making new lower lows right now. So hey, the trend is your friend right now. The only challenge I have with the dollar index right now is at 93.50. If you look at that point right there, you had some hesitation on it in early April. Was it April? Actually, end of May or March, excuse me. Last day of March is where it kind of peaked out and then been sold off aggressively. So I feel like the dollar should be a safe spot to be moving to the upside if we can get some spending reined in. Remember, we've been printing and printing and printing. The more that we print that dollar, the more likely the dollar is going to continue to fall. But as inflation worries spike and start to rear their ugly head, the move here that the Feds have to make is we have to rein in currency. We have to bring in money supply, right? They've been increasing money supply. To rein in inflation, they'd have to take down money supply, raise reserve requirements for banks, and raise interest rates. So that actually would be bullish for the U.S. dollar overall. And I think that's what's reflecting in price right now is inflation. Dollar will probably continue to rise because of that. So yeah, I think you're good. Drilling for now, not fighting anyone to death. Yeah, Don, you've been doing this long enough to know you don't ever in the markets fight anybody to the death on anything. Just go with the flow. As Bruce Lee says, be like water, it must flow. Fernando says long TLT. I actually don't really trade TLT, but yes, I mean, look at the price chart of TLT. If we look at the definition of an uptrend, that's a beauty. I mean, since late March, you've had higher highs, higher lows. Trend is your friend. Keep going. You know, you're right near the highs, but overall, you know, watching that 20-year, remember this is the price of them, which means as you see price rising, yields will be falling. A little tricky here, but yeah, certainly buying TLT, the trend looks good right now, and roll with that one. Got diamond hands on Big Eb. Merlin FCX. Oh yes, Freeport McMoran. Yes, has been hurt more than copper. Time for a long call, perhaps. Chart this kind of. Let's look at FCX. Why not look at FCX? You know, it's interesting. I have a question about airlines as well, and airlines have been a very similar picture to this. Actually, we'll bring it up right after this as the next question. You know, this is a tough one because it begs the question of time frame. If I'm a real long-term person, saying I'm thinking years out, I may look at this chart and say our current price action is just a mere pullback in this bigger trend. If I'm shorter term, as I tend to be, I'm looking at it going, is a new trend forming? Could this be now a beginning of a much bigger move down in Freeport McMoran? And that's, again, setting aside any views or feelings or opinions about the fundamentals. It's just purely price chart, right? Purely price chart. So I look at this one right now. The fact that it broke down today below this most recent low is concerning to me. It doesn't make me feel comfortable with FCX. You know, where might there be a bigger turning point? probably somewhere down around 30. I think you still got about a 10% drop left in Freeport-McMoRan before you hit any real substance of demand. There's also some levels down around 26, which is going to be another, $7 drop from here. So I'm not very comfortable in this one. Could you go with the options and use the leverage and know that you have, if you bought some calls on this, know that it's just a premium at risk? Certainly you could. I asked the question to you guys, do you think that silver and copper and precious metals may be overdone with this rally in Freeport-McMoRan? I mean, we've gone from a low on FCX of $4.82. Actually, I'll just do a percentage gain chart here for you. $4.82, and we peaked out. In 418 days, FCX rallies 845%. Some of these things, I feel like they've gotten way ahead of themselves. I have nothing against copper and silver and gold and miners at all, but you look at that rate of return, to me, that might be a bit overdone, and I think that you could see more downside movement here. Even if you did something as simple as, let's look at Fibonacci retracements, as so many people like to do, even if you just drop 38%, it takes you right to that $30 mark that I just mentioned. I'd be at $30. I'd probably be better. I would feel much more comfortable buying calls on this. Maybe you sell some puts right now and see if you can get some premium and get exercised at 30. I think you're going to continue down here, Big Eb. The chart is kind of ugly, and I just feel like it's due for some downside move here. I'm hoping you meant China, because other than that, Gina's just a really mean person, Walter. Any open slots next week? Sure. Pick a day, Don. I've got a wide open week, so good to have you. Anytime, good to have you on. Airlines are a sharp knife right now. They either bounce here, or I'd say leave that one alone. Yeah, we're going to check that in just a sec, because I have, oh gosh, don't even start with Elliott Wave. I just gave away, it's funny, a buddy of mine trying to get into trading and investing, and of course everybody's always like, can you teach me everything? I'm like, listen to the show. It's about as much teaching as you can get from me unless you take paid classes. One of the books was Elliott Wave, and it's like this 150, 200-page book on Elliott Wave, and I'm just like, how can you write that much on Elliott Wave? 1, 2, 3, 4, 5, ABC. It's that simple. I could do it in a pamphlet, but somebody had to spend $100 to get this book produced, or make $100 to sell a stupid book on Elliott Wave, which I think is smoke and mirrors personally, but it's okay. My opinions don't really matter. All right, let's go to some more listener questions. And again, this is actually, we were just talking about it with Don's comment about airlines. Scott says, with airlines loaded up for the summer, would you buy any airline stocks? I'm looking at Southwest Airlines. I actually talk about this in the Monday morning must-knows for OTA, which will be out. I think we'll release that Monday. Still have some more stuff to put into it, but we'll probably do that on Monday. Look at Jets. All right, you look at Jets. It's rather a similar picture to what you saw with Freeport-McMoRan, right? A really big run-up, and then all of a sudden, it's just really been breaking down. And if I look at Jets, which is pretty much every airline you can think of in the United States is in there, plus a lot of international ones, I'm looking at 2150 is a pretty logical point for there to be a bounce, but what makes me nervous is there are, again, some massive unfilled gaps here. Huge. I mean, this gap that goes back to the 6th of November of last year is all the way down around 1775. I don't know if you can buy Jets right now and hold through a $5 loss. I don't know if you'd want to do that. Losing 20%. I probably would wait a little bit and maybe buy at some lower levels or sell some puts here. So Scott, airlines, I'm not that big on, although you are coming into an area of demand. You could, if you wanted to, make a trade there, but I think you got to be real careful with it. I think the current trend is just really aggressive. I do believe that the amount of, I don't have the chart up. I do believe that the amount of run-up that we've seen in Jets maybe was a little bit much, right? Some of these companies weren't even flying. If they did, they had very limited flights, and all of a sudden they were almost back up to their pre-pandemic levels. That's a little crazy. Now, Southwest Airlines, which is arguably one of the best, LUV for Southwest. Again, same picture with Freeport-McMoRan. Totally different industries, but overdone rally, and now it's a correction to a more logical level. Yep, sorry, Jimmy, I was off for a second. I know, I switched. I forgot. It's the whiskey. Oh, it's Friday. I'm blaming the whiskey, brother. That's what I am. So today for Southwest, you're down about 3.5%. To me, I thought it should have stopped at the 5150 mark. We had that one marked out a while back as a logical target. It's ripped through it. I mean, I don't see anything that could potentially even slow this thing down until it gets to about $44. So again, that's another $5 drop. Maybe you look at 45 as a potential buy-in. I do think that as we roll into summer, airlines should do better. However, you look at some of the news coming out right now, they're talking about, some places need to put masks back on. And all of a sudden now that puts dampers on people's travel behavior. And do we get into a summer where everyone's so excited, but especially out here in California where we've got Mr. Newsom who just will put a mask on because the sky's a different color than blue. We might all of a sudden find ourselves in a situation where I want to travel, but I can't, or I have many restrictions, and I'll just not travel. So to me, it's a bit risky. I kind of agree with Don says it's a sharp knife right now. It's a little bit dangerous. It's very iffy. I'm not very confident in the price charts. I do think you'll probably see it drift down even further and have more of a correction on that one. Let's see. Eric says, I'm in at 27 on pandemic levels on Southwest. Eric, and again, don't take this as being condescending. It's tough love. If you bought Southwest at 27 and you're still holding it at 49, what happened to you at 65? What happened to you at $66? You got to trail that thing up. At this point, you should. If you bought at 27, you should already be out. If you had good money management or risk management there. So, Eric, you got to ask that question of like, okay, how long am I going to let this thing go? Would I let it drop back to 27 and have 9 months of profit taken away? I hope not. It doesn't look very good right now, that's for sure. Jerry says, the vaccinated still wear masks, a bizarre world. Yeah, not only that, I drove by some guy, and he's got this, he's a younger guy. He looked like he's probably 30, 35, driving an S550 Mercedes, all windows rolled up, nobody in the car with him, and he's got a mask on, and we won't do any ethnic profiling at all. But he had a mask on and a shield. I'm like, brother, you're in your own car. How do you be that? That's a little overkill. Anyway, sorry, won't go down that road. Lack of business travel is key ingredients. Exactly. You would think that business travel would be increasing right now, but now with all the home conferencing and all that stuff, it's gotten so much easier. I mean, I look at a lot of the TV shows now, which I try not to watch, but sometimes you can't. You look at CNBC, Fox, Bloomberg. A lot of these reporters, they're not going to the studio anymore. They're just broadcasting out of their living rooms. It's crazy. All right, cool. You might want to be using some options and trying to generate some extra premium against that position that you currently hold. Sell some calls. Sell some 60 calls or 55 calls on it just to be generating some premium, because the trend right now looks like Southwest and maybe some of these other airline stocks are headed even further. I tried not to. Let's see. So that was all the questions I had. I had one other question about a cryptocurrency called Solana yesterday. I didn't get a chance to get to it. But if you guys have some, let me know. Let me know what questions you guys have, and I'll try to get to that one. Shields Creek. So Solana, someone asked about that one yesterday. Look, there's so many different cryptocurrencies out there with different projects and things that they're looking to achieve and accomplish. And Solana has cracked a nut that a lot of people, or a lot of cryptos don't, which is really time stamping transactions. I know it sounds easy to do, but it really hasn't been done. It's predominantly based off of some other algorithms, so proof of stake, proof of work. These aren't exactly timestamp transactions. What is most interesting about Solana for me personally is its scalability. When I think about scalability, you look at Bitcoin, you're only talking 7 transactions a second. Not going to be that scalable. Even once you throw Lightning on top of it, it's still not that good. If you look at Ethereum, 15 transactions per second. Still, they're looking at scalable solutions, but it's not that big. You look at other ones like EOS, for example. I told you that 80 million transactions in a day is its most. That's scalable. If you look at Solana with the technology they have, which is complex, I'm not going to bore everybody with the details, but Solana is claiming that they can do 65,000 transactions per second. Now, if you have that type of technology, you can blow the doors off of Visa. And Visa's charging merchants 3%. If I can go with a program like Solana or a protocol like Solana and go to merchants and be like, hey, if you use our protocol, we'll charge you 1/10 of a penny per transaction. 1/10 of a penny. All of a sudden, as a business owner, would I rather be paying 3% to Visa or MasterCard, these other card companies, or 1/10 of a penny to somebody else for a faster transaction? It's an absolute no-brainer. So, we talk about digital assets and kind of the game-changing possibilities of it. Solana is all of a sudden taking a big leap forward. Now, it's still on testnet. When something's in testnet, I lose a little bit of my confidence in it and think, okay, well, it might not be brought to market. It may never happen, but it's an idea. It's a concept that I think is fantastic at this point. I do like Solana. I do not own any right now. I will be owning Solana shortly. Got a little bit of work to do. All right, so Tom, your FANG stocks, huh? It's funny with the whole antitrust case going on against some of these big firms. You would think they'd be getting beaten up. I mean, Facebook today was down a little bit, but nothing overly dramatic. It's still lingering at those all-time highs. So back here, way back here when it gapped up, Don Fron, who's with us, was like, I'm bullish, bullish, bullish. And I was like, I'm bearish, bearish, bearish. I was right for 4 days. Don's been right for the remainder of it. He's right the whole time. Let's see. So let's go FNGU. So again, I have an issue holding anything that's leveraged like this. This is a triple long FANG stocks. So your Facebook, Apple, Google, that type of thing. Triple long. I would say it looks a lot weaker than it has been for sure. When you look historically, especially last year, it was unbelievable. This was just a monster mover. But now, do you get the feeling maybe that it's struggling a little bit, that it doesn't have that kind of strength that it used to do? I have that feeling just by looking at the way it's operated over the last 2 weeks, where it rallied up aggressively, had a pretty sharp drop, and then it's tried to rally up, hit its head on 40, and then sold back off. So I'm looking at this as with a little less of a bullish eye than I would have normally. It's kind of at this transition point for me where if I look at the peak that we established on FNGU, which again is a triple long ETF for the FANG stocks, you go to the 16th of February, that was its peak. Well, we peaked out, but much lower on the 14th of April. Now, I would already be thinking, hey, this thing's getting weaker and weaker. The move that happened in mid to late June pushed it back up above those levels and gets me kind of back in a slightly bullish sentiment. But all of a sudden, I see this chop back and forth. Doesn't feel real strong. Volume is lighter than normal. I'm not that confident in FNGU. I do feel like you'll see this thing drift down a little bit, or at least have a lot more chop. But I don't think you're going to get that real strong, massive move up the direction that you had back in 2020. Let's see. Have you seen the crypto hex? I saw the token yesterday, just that it spiked up, but it's not really one that I watch. I'm not a huge fan of a lot of the token projects. If I'm going to invest in something, especially for the long haul in crypto, it's not going to be tokens. It's going to be predominantly blockchains, meaning companies that have their own native ecosystem. Hex is simply an Ethereum token. It's an ERC20 token. So I can create an ERC20 token in about 10 minutes. I could do it with you guys on the show. I could, if you want to pay for it, cost you about $300. I could create an ERC20 token and let's say under 30 minutes, turnkey, ready to go, ready to sell, ready to market, and we can go and pump that thing out there. So I'm not a huge fan of tokens per se. Sometimes there's great projects behind those, but I have not looked into Hex specifically. What is it that they're doing? I just saw the recent spike up, and my thought would be dump that thing and take your profit while you can. Yes, earnings. Well, you got for the FANG stocks. Yes, you have earnings next week, right? You have Netflix on. Oh, come on, Merlin. I think Netflix is Tuesday, and then the week after is the mother load for most of the other FANG stocks. So we'll get a lot of volatility in FNGU going forward here. Let's see. What else do I got? Ready to do these polls or get questions? Let's get some for Tuesday. I don't usually do polls, but feel free to ask polls on your show, Don. And if they have questions you want to answer on air, I usually just do live questions, but maybe we'll spur some conversation and see if Don Front and I can go back and forth and do a. Most of the time, Don and I agree on just about everything, but maybe we can get some disagreement. We can slug it out, right? Just kidding. Let's see. Jerry says blockchain is the Achilles heel for the banking cartels. 100% agree. And I would say it's not just blockchain. There's other technologies. Again, directed acyclic graphs, Hashgraph. There's other technologies, but bottom line is it's decentralization of the data that is the threat for all these financial institutions. You know, you look at what Solana is doing, you look at what EOS is doing, or Cardano or Polkadot. It is a direct threat to these financial firms, and I love it. I love when you have a disruptor. I mean, you look at what the internet did to telephones. I mean, does anybody in this room actually have a landline in their house? I don't see the reason why you would want one. I mean, why would you? I got my cell phone. It goes with me everywhere. That was a disruptor that a lot of people thought was a joke back in the day. And I think right now people think digital assets are a joke and not going to be anything. And I disagree. I think it's going to be a very, very disruptive technology. And the way that we go to banks, the way that we go get loans, the way that we get insurance, I think will fundamentally change in the next few years for the better, for my opinion. Yes, well, we'll definitely talk about Tesla with Don next week. I'll let Don pick his day, and then we'll let you guys know which one that is. All right. What other questions you guys have for me? I don't have any other ones out of there that we have. Let's go over RTY. Look at the old Russell. Definitely a hell of a lot weaker. Do I have the RTY? Yeah, I should have it on this screen here. All right. So as we've done week over week, I'm going to continue to move this yellow box. The infamous yellow box. I think I'm just going to have a shirt. I'm going to make shirts that says TraderMerlin. It's just going to be a yellow box. That's all my logo should be. Look, we talked about this a couple weeks ago, right? Saying, hey, we're bouncing up against that 2350 mark on the RTY, Russell 2000 futures. Great point to be shorting. Why? Because it hasn't been able to get above that box, the top of that box, since February. For those that are listening to the podcast right now and can't see anything, we kind of smacked our head against that 2350 mark, but we also came down to a floor of roughly, I like the 2100 mark. Seems it's a little bit more round of a number. I can move this line up here if you guys want. But really, we've just been range bound. It really hasn't done too much. And the thought was, hey, anytime you're up near that top, buy some puts. Down near the bottom, buy some calls and play that range. What's noteworthy now is it's the first time in a couple of months we've really aggressively come down towards that low of 2100. So next week's going to be very interesting for me. The yellow box better not be copyrighted. Who copyrighted that bad boy? No way, man. It's my box.
It's my box. I'm going to stick to it.
I'm colorblind, so I could just say it's yellow, whatever color it is. Anyway, as far as market goes, it's not looking good to me. Russell is obviously much weaker. Check out the S&P, right? The S&P is looking great. You can look at the NQ. Here's the NASDAQ. It's just, only 2 down days, and really everything else is just strong, really aggressive moves to the north side. I don't have the YM, but let's bring up the YM futures, which I normally don't look at, but even the Dow, real strong, all-time highs. And then you look at the Russell, and a lot of people say, is this the canary in the coal mine? Is this the problem? I don't know. I don't know if I necessarily believe that anymore, that this is the canary in the coal mine, but it's definitely showing significant weakness over the other 3 indexes that represent broad markets. And obviously Russell's small cap. I don't know. I think at this point now, 2100 would be a logical test point. If it doesn't bounce and see some action off of 2100, I think we'll end up finally getting out of this yellow box after 7 months of pretty much just sideways action in a 10% range. All right, what do I got? Merlin, is there a good ETF stock for natural gas and or copper? I don't do anything with copper ETFs. UNG is the one that most people are using when they're trading natural gas as far as an ETF goes. There are some leveraged ones out there that you can use, but again, I think, is it GAZ? I think that one might have disappeared. I think GAZ is now gone. Oh no, there's GAZ. I believe this is a leveraged one, but the volume on this thing is just non-existent. It trades 4,000 shares a day. It used to have more volume, but it's really kind of fallen out of favor. So I would stick with UNG. And as far as copper goes, for me, it's just the futures. I just do the future side of it, which is HG. And really, right now, it's pretty damn boring. I don't see a lot of exciting stuff going on here. All right, what else do we got? You talking Dow Jones Industrial Average? I don't even look at the Dow. Let's go. I'll just look at the DIA. I'll look at the Dow futures if that's really. I'll look at YM futures. Excuse me, if that's what you want. But I don't look at the Dow Jones Industrial Average Index itself. I'll be looking at the futures contract. And the reason I don't really pay attention to the Dow, it's only 30 companies. To me, that's not really a broad representation. It was kind of ironic when I was living in Italy. Like every morning, all the news programs I used to watch, that was the only thing they quoted. And the Dow did this, the Dow did that. Not to sound mean, I just don't care about the Dow. I care about the S&P because that's the market. To me, the S&P is the dog that wags the tail. When you have 502 or 503 companies in an index, that's a broader representation of a market where the Dow Jones Industrial Average, I don't look at that either. When you look at Dow Jones Industrial Average, which is the IA, not I, it's only 30. Now, transportation index is obviously big for anybody who's playing those market segments, those stocks. It's not really my thing, so I don't have that one up here. So, unfortunately, I don't even get the index. It's have to be a subscription to get that one. Let me see if I can get it here. DGI. Yeah, my account is not enabled for this data. Got to pay for data feeds. Yeah, good point, Don. Don says the Dow is 30 companies, but let's be honest, the NASDAQ is only 3. Fair enough. But it's 100, man. It's 100. Yeah. You got like 50% of the NASDAQ, I think, resides in 6 companies, so a little bit off. Yes, correct, Koja. And I think every company that's in not only the transportations but also in the Dow Jones Industrial Average is in the S&P. There's just tons of overlap there. All right, what time I got? Oh my goodness, I gotta go. All right, what do we have? Earnings-wise, I didn't take time to grasp any images or charts of the calendars for next week, but next Monday for the U.S., you just have a housing market index, the national NAHB housing market index is going to be coming out. That's expected to do really well, as obviously housing is ridiculously hot right now. And fuego. Other news-wise, nothing really major on the economic announcement front for Monday. On the earnings front, though, things start to pick up. Next week is a very exciting week. There's over 300 companies reporting next week. Monday's a quiet one, but you don't. Monday's a quiet one, but not the greatest companies reporting. It really all starts on Tuesday. Let me go. Hold on here. There we go. Get my list. There isn't the major tech companies except for one. You have IBM reporting next week. You also have Steel Dynamics. You have Zion Bankshares, JBHT. Those are some of the big ones. But really, for me, I'm excited. Got my popcorn trade of the day is going to be Netflix on Tuesday. That's going to be after market close. That's probably the most exciting piece for me for the week with regards to earnings. Ooh, what's your plan on that Amazon short for Bezos' flight? I'll probably end up just closing it. I'm already down on that trade, so that'll be a loss. But if that thing lands safely, I'll dump it. If it crashes and burns, I'll probably hold it for a couple days. But let's hope it doesn't crash and burn for everybody's sake other than my account. All right. Cool. I need to wrap things up. Again, I have no guest scheduled for next week. Oh, wait, there's more. I do have Don Front. You want Tuesday, right, Don? I guess we'll do Tuesday with Don Front. If you guys have questions, topics, comments, concerns, things you want Don and I to talk about, maybe do a little yin-yang, see if what our thoughts are on things, send those questions on in. You can go to TraderMerlin@gmail.com is the easiest way for you to get in touch with me. Send emails there or comment down below the video on YouTube. That's always a great way as well. You just got to filter through all the spam of people trying to tell you that their guy is going to make you a ton of money, which is the normal thing on my YouTube channel. But I don't know, but Don, do you do that? Do you spend time just like blocking all these people that are just spamming your YouTube channel? It's just unbelievable how bad that is. All right, guys, that's going to do it for me. Yes, I am Don. I'm just short only because of the flight. I love Amazon. I've never gone short Amazon in my life, but I'm only doing this because of the Jeff Bezos going up into space thing. I'm like, you know what? It's the long shot horse at the horse race where it's like a $2 bet, but boy, it could pan out to be a couple $100. To me, that's pretty much all I'm doing. I love Amazon. I think Amazon's awesome. It's going to rule the world here in the near future. All right, cool. Sounds good, everybody. That's going to do it for me for today. Again, if you had comments, questions, feedback, you got TraderMerlin@gmail.com. Other than that, I hope you guys have a fantastic weekend. Enjoy your cold, frosty beverages, and I will see you guys next week. I'll see you on Monday. Take care.